Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Entergy Corporation, and trust me, it's more exciting than it sounds, unless you find electric bills thrilling. Get ready for a shocking amount of shareholder meeting details. This report is all about what happened at Entergy's recent shareholder meeting. Who got elected, what proposals passed, and how everyone voted. It's like high school elections, but with billions of dollars at stake. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Come join us. First off, the big day was May 2nd, 2025. That's when Entergy held its annual meeting, where shareholders got to vote on important company matters. At the meeting, there were three main things on the agenda: electing directors, approving the company's choice of accountants, and giving an advisory vote on executive pay. Let's see how each of these went down. The first order of business was electing the board of directors. Shareholders got to vote on 10 nominees, and they all got the thumbs up to serve until the next annual meeting in 2026. Looking at the numbers, Gina Adams got over 356 million votes in favour, with about 2 million against and some abstentions. John Black, John Burbank, Kirkland Donald, Brian Ellis, Philip Fredrickson, Elise Hyland, Stuart Levenick, Andrew Marsh and Karen Puckett also got the green light. What stands out here is that while all nominees were approved, some received significantly more against votes than others, potentially signalling some level of shareholder concern. For example, Stuart Levenick and Andrew Marsh had considerably more votes against them. Next up was the ratification or approval of Deloitte & Touche as Entergy's independent registered public accounting firm for 2025. This is basically like shareholders signing off on the company's choice of accountants for the year. The vote was overwhelmingly in favour, with over 378 million votes for about 11 million against and a small number of abstentions. This is a pretty standard procedure, and it shows that shareholders generally trust the company's choice of accountants. Finally, there was an advisory vote on executive pay. This is where shareholders get to weigh in on whether they think the company's top executives are being paid fairly. It's an advisory vote, meaning the board isn't required to follow the shareholders' recommendation, but it's still a good way to gauge investor sentiment. The results showed about 347 million votes in favour, about 10 million against, and over 1 million abstentions. The vote passed, but the number of votes against it are pretty high. This could signal some unhappiness among shareholders regarding executive compensation practices. So now let's step back and look at what this all means. Entergy's shareholder meeting seems to have gone smoothly, with all proposals passing. However, a closer look at the numbers reveals some interesting nuances. The high number of votes against certain director nominees and the executive pay package suggest that some shareholders have concerns about the company's direction or compensation practices. From a financial perspective, Entergy is a major player in the energy sector. Their performance is driven by factors like electricity demand, fuel costs, and regulatory changes. The company faces both opportunities and challenges in the evolving energy landscape, including the growing demand for renewable energy and the need to modernise its infrastructure. One notable risk for Entergy is regulatory uncertainty. As an energy company, it operates in a highly regulated environment, and changes in laws and regulations can have a significant impact on its business. Additionally, the company faces the risk of operational disruptions, such as those caused by severe weather events. In terms of direction, Entergy seems to be focused on modernising its infrastructure and investing in renewable energy sources. This is a positive sign, as it positions the company to meet the changing demands of the energy market and reduce its carbon footprint. However, the company needs to carefully manage its costs and navigate the regulatory landscape to ensure its long-term success. Looking ahead, Entergy's future will depend on its ability to adapt to the changing energy landscape, manage its risks, and maintain strong relationships with its stakeholders. While the company faces challenges, it also has significant opportunities to grow and create value. Alright, that's our breakdown of Entergy's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.